Which one of these three Warren Buffett stocks is the best one to buy now? MasterCard, Apple, or Amazon? I'm going to answer that question in this video, so stay tuned until the end and you'll have your answer. Now, Warren Buffett is one of the best investors of all time. The Oracle of Omaha has delivered legendary returns to investors over the decades, and it's going to be hard to replicate the kind of investment results that Warren Buffett has given shareholders over time. Still, it would be interesting to consider Warren Buffett's top holdings and all of his holdings overall to try and decide which one or if all of his holdings would make sense to add to your portfolios. So in this video, I'm going to compare MasterCard, Apple, and Amazon across 4 different metrics and determine which one is the best one to buy from my perspective. What's my opinion, right? This is my personal investing style, and I'm going to take that into account to make a decision between these top 3 stocks. So the first metric I'm looking at, I have here a chart of annual revenue growth year over year and going back all the way to 2014. And what you notice is for most of the years, Amazon has been growing revenue faster than Apple and MasterCard. And I suspect for the longer term, Amazon has better revenue growth prospects than Apple or MasterCard does. But in the most recent year, MasterCard has done the best at revenue growth of 17.76%. Now, remember, MasterCard makes revenue by taking a percentage of each transaction that happens on its platform. So if you go to spend $100 and you use your MasterCard, MasterCard will get somewhere along the lines of 3% plus a small fee like 50 cents or something like that. So that's been a tailwind for MasterCard because inflation has been increasing the amount of dollars that people have to pay to buy the same amount of goods they've been buying. So that's a tailwind for for MasterCard, and that could be a sort of benefit for those people that are investing in MasterCard stock is it gives you some form of inflation protection. Another thing I'll note here is that one of the main things that Warren Buffett looks for is in an investment is a competitive advantage, a moat, so to say, a reason that makes it difficult for anyone else to encroach on the existing business. Now, all of these three have that characteristic. So, if you think about Apple, its unique ecosystem connected to the iPhone make it very difficult for anyone to encroach on its business, right? There are more than 1 billion people that have an iPhone today, and those individuals that have an iPhone probably have Apple Music or Apple Cloud with their photos, and maybe they have an Apple computer, and their photos and data, everything is connected, everything has been customized with the Apple ecosystem, and they're less likely to switch over to another brand because they've already customized, they've already learned how to use Apple's products, and it makes it difficult to switch, right? So the cost of switching is a competitive advantage for Apple. Amazon, meanwhile, has built out a robust fulfillment and logistics network that it has spent hundreds of billions of dollars developing, right? Think about all the cash that Amazon has reinvested into the business over the last 2 decades, building out this fulfillment network and all the data it's collected on its logistics network to improve and make it more effective and more efficient, even if it can improve delivery times by a fraction of an hour. Then that's a big benefit on the bottom line when you consider that Amazon is delivering millions and tens of millions and hundreds of millions of items every year. So that's going to be difficult for anyone else to come in and encroach and take Amazon's business, right? So That's one of the reasons I'm sure Warren Buffett is attracted to Amazon stock. And finally, MasterCard. Think about how difficult it was for MasterCard and its competitor Visa to build out its merchant and customer network so that it can have its card accepted at all of these different merchants worldwide. And then and and having a MasterCard in so many people's wallets, building out that network, how expensive that was to build that all out. Now imagine somebody else trying to come in and do the same thing, how difficult and expensive and time consuming that would be. And that sort of protects MasterCard's business from anyone else coming and taking a significant amount of its market share. So the next metric I wanted to look at is cash flow from operations to sales over the trailing 12 months, and look at how incredible MasterCard is in this metric here. 50.34% compared to 28% for Apple and Amazon, trailing way behind at 9.1%. Now, take that with a grain of salt here, because Amazon relies on multiple transactions and volume to make up for its lower margins and lower cash flow from operations. But look, even Apple is significantly behind MasterCard in terms of turning sales into cash flow from operations, and that's just a testament to how lucrative MasterCard's business model is, the way it has been set up and the way it's generating profits from each sale. It's very lucrative, and as sales grow, that's gonna a lot of those sales are gonna flow to the bottom line and flow to cash flow. And another metric I wanted to look at was the operating profit margin over the trailing 12 months. And again, MasterCard showing its dominant business model here with an operating profit margin of 57.21%. Nearly double that of Apple, which is a respectable, very respectable 29.41%, and Amazon coming in way behind at 2.3 and 38%. But remember, Amazon tries to make up for that with high volume and a lot of units sold, instead of trying to make a lot of profits off of each individual unit. So finally, I wanted to look at valuation to determine which one of these three Warren Buffett stocks is the best one to buy. And I chose to use the forward price to earnings ratio. Looking at this metric, Amazon is the most expensive at 65.31. At nearly half that price is MasterCard at 30. And then Apple is the cheapest at 25.75 forward PE. Now, for me, if I had to choose one of these three Warren Buffett stocks to buy right now, my favorite out of these three would be. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. MasterCard. I love its business model. I love the competitive advantage, the moat it has built over itself. I love the profitability of the business. The operating margins are absolutely remarkable, and I love the fact that MasterCard and its main rival Visa are not engaging in intense competition, lowering their fees, competing with each other, and hurting the industry profit margins. So for all those reasons, I really like MasterCard. Out of these three, MasterCard would be my favorite Warren Buffett stock to buy. Alright, that's all I've got for this video. I truly appreciate your viewership. Thank you for watching. If you like this video, I'm going to link you to a couple of videos at the end of this one that I think you will enjoy. So please click on one of those, and I'll see you over there.